What's up, traders? Welcome to another episode on the trades we missed last week. So, without further ado, we had a trade on Tuesday. We couldn't find a trade on Monday. Yeah, there was no trade here. We can see a couple of FEGs, fair value gaps, and all that, but there was no break of market structure and a newly formed fair value gap as usual. So, on Tuesday, there was a fair value gap and there was a break of structure here. As you can see, this was the first trade on Tuesday. So there was this fair value gap. This fair value gap has been cited here and been highlighted here. So you can see it bounced from this fair value gap. So you can see how price taps into this fair value gap, this area, and give you a break of structure here. So you can see it like so. And after this, we can see a newly formed fair value gap here. So this newly formed fair value gap is where we'll get our entry, and as well this breaker here. So we can use this as our entry for a bullish position here. So you can see how price went all the way down to this other block. So let's just use this fair value gap, and our stop loss is right below this low that created for us this fair value gap, and our high would be at a given and our take profit will be at a given high here. As you can see, this is a 2.48 risk to reward ratio, and we can put it here for our maximum CP. This would give us a 2.96 risk to reward ratio for our first trade. Now this is our second trade, and from this we'll have a couple of bearish trades. So last week was a bearish week actually for GBPUSD. So we have a fair value gap here. You can see this fair value gap here. So this is coming from this area here. Let me show you where this fair value gap is coming from. Now this fair value gap is here. This whole area is coming from this fair value gap. This is the first fair value gap. You can see how markets broke structure prior to coming down here. So that's actually validated this fair value gap here. So you can use this fair value gap as your second entry because price is actually moving bearish. As you can see, price breaks below this previous trade here. So we can use this as our bearish trade, short position like so. This is actually not our usual trade, but it can go for a setup also. So we have trade like so from here to this low right here. This is giving us a 2.93. So this trade is giving us a 2.93 here. As you can see, it's our first bearish trade. Moving on, we have a bearish trade also for our number 3 trade. So you can see this first one, we didn't indicate the break of structure. Now we have our break of structure here. So the next in line is our fair value gap. So this was our fair value gap here. So this trade number 3 is coming from this fair value gap here. Let me put this to the side. We have a fair value gap, market tapped into, market tried to break away from it a couple of times. So we have a newly formed fair value gap after this break of structure. You have a break of structure here. You also have break below this previous low here. And the next thing we would look for is our fair value gap. As you can see, our fair value gap has been sighted from here to this spot. So now we have our bearish trade for our trade number. What's our trade number 3? So this is our trade short position at this spot. You can put it at the center of this fair value gap to give us a higher risk to reward ratio. And our stop loss risk and our stop loss will be right above this previous high here. Take profits would be at your given low, could be here, giving you a 2.0 risk to reward ratio, or here, giving us a 4.34 risk to reward ratio. So this is where we'll put it here. And the next would be our trade number 4. Trade number 4, also a bearish trade. And we have a fair value gap market tapped from. This is a fair value gap. And this order block here. Order block and the fair value gap here. Market uses this supply area. After this supply area, market tapped into it and broke below this previous low right here, giving us a break of market structure like so. And this fair value gap right here, we have a fair value gap here, and this would be our entry for our bearish position. So we have like so at this fair value gap, and at the top of this high would be our stop loss. And our take profit can either be this low right here. This is actually a low resistance low right here. So it can actually be here, giving us a 2.12 risk to reward ratio, or here at this previous low here. And this is giving us a 3.46 risk to reward ratio for our trade number 4. Moving on, be our trade number 5, also bearish. You have a fair value gap here. You have a fair value gap here. Let's put this to the side. This is a fair value gap here. So we align this whole fair value gap to the top. Market comes down, taps into this fair value gap, bounces off from it, and give you a break of market structure and also a fair value gap here. We have it here, fair value gap, and you can use this for your breaker. So you can highlight the whole of this market to tap into it and give you a bearish structure. So we have a high, which is our stop loss, our entry here at this fair value gap, and our take profit would be at your swing low here. And this is giving us a 3.14 risk to reward ratio for our trade number 5. Our trade number 6 as well, a bearish trade. Tap into this fair value gap. As you can see, this is a fair value gap. And moving on, after market taps into that fair value gap, it breaks structure and created a newly formed fair value gap here. So we have a newly formed fair value gap. Market tapped into it again, giving us our entry. So this is where we put our short position here at the fair value gap. and stop loss right above this high. Our take profit would be at any given low to the left side. So we have a low here. So we have a low here, and this is giving us a 1.86 risk reward ratio. You can see how markets just rally to the downside and could potentially give you more of that. So we have our rules not to be broken. We have 1 point risk to reward ratio. The next is our trade, and the next in line. So the next in line is our trade number 7, and we have a fair value gap here. Market tapped into this fair value gap, rally to the upside, and we have a break of market structure here, and you can actually see a newly formed fair value gap here. So this fair value gap would indicate our entry to the upside, long position as so, and our stop loss right below this low that created for us the next fair value gap. Our take profit would be here, which is giving us a 1.93 risk reward ratio, or we can actually put our take profit here right before this next fair value gap here. It can indicate our um, boundary. So this is where we'll set our boundary here, because market can resist it at that PDRA. So this is giving us a 3.34 risk reward ratio if you set your TP to this area here. And the next is our trade number. And the next in line is our trade number 8. So this is our trade number 8, also a bearish trade. Now this is market tapping into this fair value gap here. This whole spots on our high time frame, like the 5 minute time frame, is our fair value gap, and market tapped into it, giving us a break of market structure here. You can see a break of market structure here and a newly formed fair value gap right here. Fair value gap here on our trade number 8. And the next is citing a newly formed fair value gap and an entry, giving us a bearish position here. This high would be our stop loss, right? This fair value gap, our entry, and would have to stretch for where we'll put our take profits. Where we go back in time, we can't actually see where our take profit would be, or you can just set your take profit to be 1 to 2 to 1 to 3 as maximum. So this is a 1 to 3 risk to reward ratio for our trade number 8. The next is our trade number 9, also a bearish trade. As I said, GBPUSD for last week was a bearish currency pair. So this is a fair value gap here from the past, and we now have a break of market structure at this spot here. Break of market structure, and prior to that we had a fair value gap. Yeah, this is a fair value gap. Market comes back to tap into that fair value gap, giving us our entry signal. Short position at this spot here, and our stop loss would be at this high, or this high. This high would be better off if we want it to be this high. We can have a higher risk to reward ratio. Let's see. So we have a 2.77 risk to reward ratio. If we set our TP here, like so, and we have a swing low at this spot. If you want to set your TP to this spot, you have a maximum risk to reward ratio, giving you a 9.08 risk to reward ratio. And you can see, boom, we have our TP. The next trade would be on Thursday, last week Thursday, and it happened to be our first bullish trade in a while. This is a fair value gap here. You can see it. So we have a fair value gap here, and market tapped into this area. And as markets, as it and as the price tried to bounce from this area, we can see few, we can see a newly formed fair value gap here for our number 10 trade, and would anticipate that price would come back into this area because it has actually broken structure here, and this is long position here at this fair value gap. This one is here. This is our stop loss right below this low, and our take profits will be at this one here. Our take profit would be at this high, giving us a 2.62 risk to reward ratio. The next trade would be trade number 11. So this is our trade number 11. You can see a fair value gap market comes back to tap into this fair value gap here, this area. And as markets bounces off from it, it created what's a break of structure here and the fair value gap here. So this fair value gap will be used for our entry, like so, short position here, and as this spot would be our high, and our take profit would be at this low right here, giving us a 2.67 risk to reward ratio. Or you can as well use this previous low here, and it can give you a 4.6 risk to reward ratio. The last but not the least is our trade number 12, and you can see a break of market structure here. This is our break of market structure, like so. After price comes to tap into this fair value gap here, we have a tap into this fair value gap and a break of market structure. Prior to that, we have a newly formed fair value gap, and we can as well use this order block for our entry. So using this order block would give us a higher risk to reward ratio. Having said that, we have our long position like so, and our take profit would be here at this given high, giving you a 2.84 risk to reward ratio, or this one here, which is giving a 3.66 risk to reward ratio. So we have a 3.66 risk to reward ratio, and that was all for last week. So moving on, let's go back to our charts and backtest and see what this new week has for us. Don't forget to subscribe, like, and let's meet on our next episode on the trades we missed last week.